It's nice, like, it probably won't last forever, but we have such dedicated characters in here, like, we have, like, a high degree of, character, I think, and, I like that.
There's a bit of feedback, like a bit of an echo just with your voice, Zach. I'm not sure if that's because of who's recording it. Ah, okay, that might be it.
Yeah, perhaps he just has speakers in his office or something. It'd be cool if for this, stream, we have, like, an open dialogue with everyone. In one of the questions, I think it was Spittleton mentioned that, like, he's intimidated, and I also remember feeling the same way, and, yeah, it'd be cool if everyone who comes just feels like we need background music, you know, Zach?
How do we do that?
I don't know.
We chat
Intimidated
GPT it quickly and
being
see if
in
it
the
works.
live session or in the Discord in general, or what do you mean?
Oh, in the live session. It seems um like the general chat, like it seems like the vibe of the Fib Lab is going excellently.
Yeah,
How you
I
doing?
think,
How you doing, Blue? You been working hard these days?
yeah, I'm grinding,
Seems like
you
it.
know.
Yeah.
um, Going great. I I mean my most difficult running task is to actually combine all the knowledge that I gathered for trading and finance, and then after retreating basically in March for my health recovery. Um, that keeps stacking over 13 months. Then I gathered a lot of knowledge how to, stay in shape, stay healthy. And now I recognize maybe I should not fall completely back into workaholic mode again and need to turn all that knowledge from the last 2 years into wisdom to combine everything, basically work-life balance. So I guess that's a bigger challenge to to not go down the rabbit hole too much without
Yeah.
taking care of oneself, because I'm usually, I'm a super addict all my life, and I go down deep into everything, and then I can lose myself. So
It's too
yeah,
easy
how are you doing?
because we so it's really backfiring. Hey, hybrid. Because we're spending all of our time in here. Yeah.
Yeah, no, it was. I mean, some of you may have read it even more, at least once, multiple times, or not at all. I don't know, but one reason I did quit in March was not to actually get my health back because I ignored it for too long due to the shitstorm from 2024. What was in private there, but it also affected all my trading performance. And eventually, I recognized I'm not doing what I would do. So the TA was there, the skills were better, but the emotional capacity and the ability to just carry on and trust the process, so to say, didn't work out anymore because I was so much suffering with the health stuff that I couldn't stay in shape enough to focus on, yeah, let the market fuck around and try to troll you, but not let it troll you, you know. And I couldn't handle it anymore, so I recognized, okay, I need to fix my health first before I come back, so I can carry the stress that the market offers every day.
Yeah, makes sense. Makes sense. Perhaps I'm overdue for that too.
Hey everyone,
Hi.
Hey, man.
how you doing?
And I mean, we have had a very recent example from Evil Pig. He was also writing a small paragraph. I don't know if you've seen this, but when he was like, "Yeah, I don't know how it is for you. For my everyday work, for my everyday trading is highly affected due to kids running around. The wife wants something, then the work, then there's an alarm, then the dog, and whatever." a lot of distraction and obviously stress level is doesn't make it possible for him to have the otherwise capacity in his brain to just take the trades as they are and then let them go, versus being stressed out in parallel with one eye on the phone and then trying to manage all the other shit that's putting stress on him. So it's a huge factor that's highly underestimated. So there are basically two huge skill set components. One is the TA, and we can write books about it, and we do actually while we do all these things in Discord, basically with all the tracking and knowledge gathering. But that's one part of the trade, of the money making or money losing. The other skill container is actually being in the trade and going through the trade and going through the chart with the trade and letting it go, or then take a decision eventually, either taking profit or stop lossing or whatever, or adding, or that's two completely different skill sets. That I guess that's often very, very underestimated how different it actually is.
Yeah, well said. Well said. You know anything about that, Zach?
Geez, yeah. Luckily, I don't have any distractions, so I've got no excuses.
Right, but we all have to execute, right? Execution is hard. It's different than TA. Yeah.
Oh yeah, totally.
Hey, Sindot, thank you so much for the YouTube, man.
That's all good.
Yeah, I try to bump and like everything, and I'm just loving the videos.
Cheers.
We'll have to get some bots working on the comments so we can.
Yeah, I could do that. I could do that maybe.
Just make it auto comment on everything. I think we're up to 255 subscribers now. 8,500 views.
Nice.
Mhm.
It's a bunch.
So how does your shitfluencer level feel? Meanwhile, are you walking on clouds? Are you already like
Oh no, I'm
looking for
definitely
boats?
I'm definitely right down the bottom of the long drop. That's for sure. A very, very small shipfluencer.
So not checking boats and how much an island costs or Lambos.
No renting Lambos yet. That's for sure.
Okay. Yeah,
I
great.
don't think I qualify for anything.
Yeah, you're doing great work, man. So
It's a learning curve using
Well, I'll
everything
just
software. Kanye West token. Did he fuck over a bunch of people?
Is it Kanye West or his clone?
I don't know. He looks he looks like he released some token and Popstar token and dumped it.
Ready?
Hmm.
Did it only come out today or yesterday?
I think it was yesterday.
Dumped
It's
already.
on
Yeah?
Trading
That
View.
makes sense.
YZY. Let's check it out.
Hey guys, good evening. Just thought I'd second the compliments to the YouTube channel. Yeah, really helpful, Sindot. So thank you very much for that.
Hey, Potatoes, how you doing, man? Thanks. I think you asked a couple good questions.
Yeah, I've been putting them in the Discord, so I'm excited to see if we get some good answers. I'm sure we will. And yeah, so far so good.
Oh, Yeezy's token is like the opposite of what I expected. It's like it's upside down or something. Green candle, I thought would be the red part.
Chuck it on a 15-minute and go to the. It's on Polynex. Which one would you use on there? Go to the first 2 green candle range after release. Just go to that top first 2 candle range.
Give me a second. What is going on here?
Just drifting away.
I don't know what's happened to my. Something's just taken over my screen. I lost control of my. I can't move. Sorry, guys.
Do you want me to chuck it up?
Yeah, I don't know. I completely lost control of my screen. Like someone else took it over, or something happened.
Sharing a screen. That one. Check this out. Shitcoining 101. One, two, three, 4, 5. Break candle. Targets. One, two, three, 4, 5. Long. TP, and then try to TP up there, but just missed. Probably because of that. Shitcoining. And that's all.
That was a quick one.
Did anyone buy the Kanye West token?
No.
No. No. The only thing worse than algos is insiders. Can't quite predict when they're going to dump.
Okay, so I think we've been going for about 10 minutes, so we should have as many people who are going to join. I did put a message in the general chat saying we're live, so if anyone else wants to, anyone they know who's in the group, let them know we're live, and then we can kick this off. I'm going to start off because this is something on my mind. I'm going to throw it open to you guys. Is about candle closes. Something that I'm sometimes wondering is about the difference of like a body close or a wick close above a past body or wick. How do you guys do that? Is there a difference? Does it matter that if it's the body or the wick that closes? I'll find an example. Now that I'm looking, I probably won't be able to find one, but just typical. Now that I need an example, there is not one at all. Oh yeah, here's one. So here we have the green candle, the wick. The body didn't close above the previous body, but the wick did. So is that the same? Is that like a proper close? Does the body have to close across the previous body, or is there any difference there?
It's probably an engulfment on another time frame, or on this time frame you take 2 candles, which is then 10 minutes if you combine them, because every time frame, if you have 2 candles versus 2 candles, it's also, yeah, exactly. There you have the engulfment for the 10 minute, and if you go lower, maybe 3 minute, you will find an engulfment even. So always depends on the setup you're looking at. Can go into the time frames to see what's really going on.
And then when when we have something like this, it's like, does that count? It's so close. I don't even know if you can see it on your screens. Does that count as an activation of the fib trade? I mean, it's almost, it's really not touching, but it's so close. I mean, it's 0.002 from the.
I mean, you can go to the right and see if it played out anyways, no? So technically, this is not a hit, but if, I don't know, if you use it in a bot, you would probably do some offsetting for entries and exits. So
Maybe,
yeah.
is there sometimes there are like errors in the display of the price that maybe on another exchange that would have actually have gone down lower and hit it?
Yeah, exactly. But if take the orientation from the most probable or most precise feed, which is this one, as far as observation goes, then yeah, technically didn't hit and didn't complete yet. So, but eventually price will go up and then it will complete itself. So.
So for the candle closes, you're always looking for the body of the candle to close above the
Yeah.
previous body, for it
Exactly,
to count as a close above the candle. So if the body closes under but the wick is above, it hasn't closed above. Okay.
Yeah, exactly. But engulfments are only for bodies. I guess for hold levels in general, it's for clearing out that either support or resistance is different, because when there's a huge wick below hold level as support or up to the upside for resistance, then it's clearing out basically that hold level in advance. If it rejects then and goes back up later, then that hold level is already cleared. But I might be wrong there, so maybe someone else could chime in there if I'm talking shit or if that's correct.
Okay.
I think if
Well,
you're trying to fractally look at candles or fractally think about candles, if the engulfing candle body closes above the wick of the previous candle, then that means that there's going to be fair value gaps and there's going to be backside and front side holds on different time frames inside that hold candle, starting from the wick and traveling down. And if you get a candle where, like that one, in fact, either of those bottoms where the price went up afterwards. So if you, so that one is an example. There will be backside and front side holds inside that area, and you just have to continue to look to the left, and you'll find it. It'll just be the high somewhere off to the left. There it goes. So it's possibly, is it an origin level retest from somewhere? Go a bit further to the left, the top of the 2 blue candles. Just not there, a bit to the right. Close to where you've put your line. Yeah,
This?
down and left. Down and left.
Ah, yes, I see
Two,
it.
yeah, there.
Sneaky.
Yeah. How does that look? Yeah, there you go.
Beautiful.
So that's a origin break and retest, which probably would have sent the price flying. Sneaky little 10-minute freaking origin level. Look at it go.
Oh.
Yeah, so if it closes over the wick, you've got to look for things like that in the price action. And the other way when it comes to like bottoms or tops is if the candle wicks down below the one that it engulfs, but then goes back up to engulf it, then it would have generated some kind of low time frame origin level. So if you go to the very bottom of your screen there and look at those, that little engulfment in there. So you're on a 10-minute time frame, but somewhere below a 10-minute time frame in those two wicks, there'll be an origin level created, and then the price bounced off it and went up. So could be anything like a 1 minute, 2, 3. Well, actually, you're on 10-minute charts, so it's probably really low, whatever it is. Could even be in the seconds, but there'll be something down there in that area. There it is. So, yep, that's it. So it generated an origin level on the bottom side, and then it bounced off it and reversed. So yeah, you can look at candles from a higher time frame and then establish that there will be things inside those candles that affect price.
Incredible. So we never hard close level. Test it. Again, and then we're off. This is the wick down below.
Yep.
So
That's
wick
how
down
you.
below.
That's how you consider high time frame fractal price action and what lives down inside of it.
So, just on a 1 minute, that's kind of, you could say, if you weren't looking at anything else, you could say it's this origin level that took us up.
Yep. Because it has to start somewhere. So like if price is going to reverse on any time frame, it has to start with something very small and then it builds. So it actually always starts from the past. So the reason price could reverse is because over there on the left, you've got that hold level. So it comes into the hold level from the past, and then it starts generating structure to change direction. So the reversal happens because of the past and then builds into the future, I suppose is the.
So the hold is giving it the initial support, and then the 1 minute creates its own structure to.
Price cannot. This is why fast up, fast down. If the price goes shooting up to the sky, then there's nothing inside that historic structure to hold it if it actually starts to come down again. So it's why XRP loses one level and there will be a ton of tears because it just went up too fast. So that's just the nature of price. So you're always trading, you're always predicting the future based on what happened on the left. And the left is the key to what's going to happen on the right.
It was extra confluence because this was an untested hold level.
Yep. And you can see the one on the left of that was the one that supported the move up. So they just ladder. So that's it. And then the one to the left of that was the one that supported that. And the moves sort of increase from the bottom. And then there'll be something. There'll be some origin level in there because you got that wick that's going down and then the price that's going up. So there'll be something in there. In fact, that, yeah.
So
Getting
are
into this
you
topic
going to
before
investigate
we-
these?
Sorry, keep going.
Go ahead. Pete.
Yeah, our question board is quite full and fitting into what we were talking about anyways. Even I posted it in the chat actually, the link to the question. Basically, how are origin levels created, how to spot them, what rules surround them, how are they used?
Well, they're just well, how are they used? They're used to change the direction of price, or create really big rejections or or supports. I mean, rejection's the same if it's going in the upwards direction. I suppose it's just a bounce. How are they created? They're created when a break level doesn't do what it's meant to do. So break levels, when they get hit, they're meant to break, and the price is meant to have continuation in the direction that it's heading when it hits the break level. So concept of a break level is it is the break of the range. So we've just put that line as the top of a distribution range. So given that it's a distribution range, it's so basically what it's saying is that from that price, people are happy to sell and the price goes down. So it's the top of a distribution range. If price closes or breaks a break level, then what that's psychologically saying is that people don't want to sell there anymore. So the price should go up. They're happy to buy there, and that's why it went above the break level. But if suddenly a whole heap of volume comes in and sends the price, hurtling lower, then that level becomes an origin level. And later on, when it's broken, you'll get some kind of real sort of impulsive move. So that candle that you can see there just sort of blew through it. And that's the hardest thing about trading origin levels is you can sit there and wait for them to close, and too late, it just goes. And likewise, you can not wait for them to close and then they reject. So they're very polarized moments. But it's also kind of why it's always a good idea to take profit when you hit break levels, because if you hit a break level, there's either going to be a small rejection, a retest later, or a really big rejection because it turns into an origin level. So if you just take profit when it hits that break level and you sit back and you wait, and then you find a trend, you wait for the trend to get established, you can re-enter on the trend and target the break level again, and it will go through it, or you TP a second time into the break level and it becomes an origin level and you're out of the trade, but you took profits at the previous time. And if you look, say, like that break level that broke to your left, so left of the one and down, more towards the bottom, where you've got those sort of wicky candles, you've got that 2 candle range. So if you were in a trade from the hold level down below and it went up to that break level and you TP'd at the break level, you would have been able to re-enter all the way back down below the break level again if you so felt that you wanted to. Or you're out of the trade and several candles later it hard closes the break level, so you know that you're going to leave that level, and then it comes back down to retest it and you just open your trade again and continue to target up to the next level. So there's very little reason why you wouldn't just take TPs at break levels. You usually get the opportunity to re-enter.
When we see this kind of thing, this is price preparing to break the level.
Yeah, building support.
Can we address the how to spot them? Because I guess that's the most interesting part of the 4 parts question for the most
How to spot
people.
origin levels.
Yes.
Well, you've got, you can do it with trend lines or just visually if you're just looking for them. All you're looking for is a break level that got hit, but the price actually, in this case, went down rather than up. So there's an origin level there at the top, you know, that caused that bigger rejection. Seeing that sideways action.
Around here?
Yeah, so there's that one in there. You might have to find it. So they're the one that is one. But did that ever get hit again in the future? No, not yet. So that is one for the future.
Why is it one is probably the question most would wonder, because
Well,
how do I spot them? Why is it this line, you know?
Yeah. So they're break levels where the price ended up going lower rather than higher after the break level got hit. So they're both origin levels. Yeah. So how do you spot them? Well, when a break level is hit on the top side, the price should go up, not down. There will be a temporary rejection most of the time because that's what break levels do, as they clear out the last of the sell orders that were sitting there at that price. But after those sell orders are cleared out, then the price should continue to the upside. So if you just mark all of your break levels, you'll notice which ones become origin levels because the price continues to the downside. And then if you look across to the left, you'll see that they reject in the future, even though they're not necessarily the highest break point. So that was a break level rejection, but the break level actually did break, got hard closed, gave a bounce. Unfortunately, it generated a hold level in the opposite direction, and it would have hit a backside range from that FVG on the left. So there'll be something on the left of your screen that it rejected off on the underside of the higher price action. Yeah, the backside of that yellow range. So inside the bottom of those two candles, basically, it would have rejected off that.
Am I here?
A little bit higher up somewhere. Down, left, and it'll be somewhere in there. So that's a multi-candle range, but yeah. So when you got an FVG like that, then you know that there is going to be a hold level on some other time frame, because you've got a whole bunch of candles that go up, and then you've got a bunch that go down, leaving a fair value gap, which means they haven't tested whatever the fractal time frame is of all of those candles. So there's some hold level in there, and so you just put lines on the backside of the or the break levels to the downside of those old ranges, and they're going to get retested and potentially reject somewhere in the future to create a trend. So that's that rejection in there. So this is not like, you're not getting the third decimal place entry here, but you're in general, this is just how price moves. That fractal pile of candles is some hold level, and it would have got hit. So you can probably scan through. So there, yeah, it's a break level retest for whatever that bigger range is, and yeah, so, and there's actually like there'll be an origin level in there because of the wick down and then the close up, even though it's not an engulfment of a distribution accumulation on that time frame, there will be one in there because of the way the wicks are on the two accumulation candles.
And for clarification, FVG is the fair value gap, and it is defined as goes by 3 candles, where the left candle and the right candle wicks do not cover the whole body of the middle candle, basically. So if you would like to draw that out quickly, exactly, yeah.
Yep.
So
Yeah,
can an origin level be attempt twice before it pumps?
Yeah, an origin level can reject. It's kind of what they use for ranging in the bear market. Like there'll be an origin level at the top and there'll be one at the bottom, and the price will just bounce between the two of them for 2 years. And once the bags are packed, think about it, it's free money, right? If you like, I love the concept of the bear market. The cost base of the people that accumulate in the bear market is literally zero, because all they're doing is cycling their original money up and down over a really long period of time. To when it actually takes off, the money that they're actually trading with just is free money. The initial is gone before the pump.
We have
Yep,
an origin
that's
in
one.
here, I believe.
You do.
From... I guess they could be between time frames. I mean, this is the weekly,
Yeah.
but I guess
Yeah, there could even be another one slightly ahead on a lower time frame, just where that one blue candle is. There's actually a few in there. There's tons. They're all different time frames and
So a break level does not prerequisite an engulfment to actually indicate with a hold level, because usually on the higher time frame stuff and on the videos, usually you have those break level lines on above hold levels if it's an bearish engulfing, and yeah, vice versa if it's bullishly engulfing. So how can we define rules now that it's like understandable? Because now it's like, okay, I take any wick that's somehow left. No.
I think the easiest way to define a hold level is an engulfment. Certainly, if you're starting out, that's all you should be looking for. But later on, you can find hold levels, things that can be on the back side of the FVG. Hold levels can be basically hold levels can also be break levels that were broken and get retested, so they can be hold levels. But yeah,
this one breaks here, and we get the retest.
Yeah, to begin with, you should just look for simple engulfments because it's easy to look at. You don't have to think too much about it.
Yeah, it's just to prevent the confusion coming from, okay, we have 35 options to get to them, and then nobody knows how to use their charts when they try to approach origin levels,
Okay. Don't know if anyone else is good at doing chart drawings or wants to kind of take over. I'm trying to do my best, but Blue, I don't know if you want to do some drawings or.
No, keep going. You're doing fine. I can bounce you some questions because we have a lot of those. If you don't mind. Also, 11 just posted like 6 topics, if I got it right in the chat. Okay, so the first paragraph, I'm not as fast in reading. Okay, so that's more a comment rather than a question. Second one, I guess we just clarified. Hold break origin levels. Any other question, sub question about that? 11 from your 6-part
I
question
think he's
comment.
just
And
copied and pasted the questions tab from the Discord. These are all the questions from everyone.
okay,
The
good.
questions.
Thanks. I didn't realize that.
No worries.
Mhm. Yeah, so we had a lot of questions definitely for backside and front side, so that's definitely a huge topic. I
That
observed
was
in the last year. Yeah, no, not only you, it's just in the all-day chatter there was a lot of backside front side. So maybe we can go through that once more to shed a little bit of light on that. So that's already a very good range that we are looking at to get some front side, top side, backside, front side talks going, I guess. So yeah, same as with many things. It's like contextual, and you can see we have this large hump to what was it, 206. Then we get a dump and then a pump again, which is basically a valley, and then it goes into a second hump. So these things all create on this time frame alone. It creates front sides and back sides. So if we are looking on the right side, on the right peak, it's while it's climbing up, it's creating at the same time a backside for after the hump, as much as it is the front side of the dump to the left, and vice versa. So if you take the left hump, you have the backside to the left side from the peak, and then eventually you get the dump and go into the front side of that prior backside. So it's basically front side and backside, and in my understanding, and please chime in every time I'm not correct, are basically the same at the same time, but it depends on where you are in the chart and also where you are and on what time frame, because obviously when you're going through the daily, you see 2 large humps and a valley in between. But you definitely would also find, if you go into the 1 hour, at the start of the dump of the first hump, you would also find some form of valley and the front side and back side created to take trades from, even if not even multiples. So always depends on the time frame. Zooming out to get a better overview obviously makes more sense for stronger signals, stronger levels. But then if you go in there and look at, I don't know, 4 hour, 1 hour, 50 minute, then you can also get those. So yeah, they're right in the middle. It's a very good example. You have even 2 valleys. Okay, now the screen changed, whatever.
You
Yeah,
want the
so
1
if you
hour
get,
again?
yeah, just go to the 1 hour. And then if you go to the first hump to 206, I guess it was. Yeah. So after, even before, you kind of get a little pre-hump, then you get a tiny valley. Even this is some form of front side and back side that is tradable. And if you go through it and take your time and replay, then you would see how those front side and back side ideas would also play out. So it's not like, okay, that's your front side for everything and that's your back side for everything. It's like, again, contextual depending on the time frame and on what you're looking at the chart. Yeah, from my understanding. So not much to add there. So feel
So
free to
if
do
you
so.
want to trade hourlies, would you be following the front side of like a daily, for example?
Say that again.
if you wanted to trade on the hourly charts, you'd be following the front side of a daily. Like if the daily is ranging downwards, but you have smaller front sides on the hourly that are going upwards, you would still kind of want to trade downwards.
Yeah, exactly. So
Yeah.
if you think the trend is changing from a peak, and then you're creating that valley after the initial pump, then you would still look to the left, so to the backside, while you're going down. And then when it's creating that, let's say, inception or fractal front side, when it's getting its little bounce while going down, then you would definitely look to the left and see what you got there.
Yeah. So trading the front side is basically trading with the current trend then.
Yeah, and then when it goes up right into the second hump, again jump in.
The
Finn,
terminology,
if I'm wrong here. So
the terminology kind of gets a bit mixed up. The front side of a range is a different thing from the front side hold level. So the front side hold level would actually be on the back side of the range, and the backside hold level would be further back from the back side of the range. Backside hold levels would actually be almost a previous range that has already had its engulfments and moved up from it. So maybe I'll just chuck a chart up. It's probably easier to explain it.
Yeah.
Hold on. Open up tab number 50,000. Okay. Can you see the wicks?
Yep.
So anything that happens here is the front side of the range. And the front side, whatever happens on the front side is because of whatever happened here, which is the back side of the range. But front side and backside hold levels are things like where you have an engulfment like this, and the backside hold level will be up in here because it got engulfed and it created that bounce. The front side to this would be on somewhere down in here, which is kind of where it's heading now. It's heading down into that front side. So the front side hold level is always going to be on the back side of the range, and the backside hold level is going to be even further back than the backside of the range, and it will be exposed via some kind of fair value gap. And it may have other things, like it could be an origin level as well, and that's in fact it generally is an origin level because you got such a voluminous breakout from here that it kind of had to be created by some origin level breaking that was back here, which means when it gets retested, it gives you that bigger bounce from the backside versus the front side. So the front side is more about accumulation at the greediest point. So if they drive back to here, it's because they really want to be buying cheap, and that's why you get more time is often spent in these front side levels, and that's also why they break trends, because they're only greedily accumulating down here because they want to reverse the price and ladder up. So
So
maybe
is it
trade
the fact
one
that we call
side,
them
you would be
back?
sorry. Go ahead.
So we
No,
call
go
them
for it.
front side
Go.
hold levels because they're the front to the back. So back is back, front is forward of it, which has got absolutely nothing to do with the fact that that is the back side of the range and that is the front side of the range. And this will become the back side of the range one day if the price starts reversing. So when the price is going up like this, all of the hold levels and any origin level retests, etc., that exist, there's probably something there. Anything that exists up in here will create the price action that happens here.
Yeah, that's exactly what I meant, but explained badly, probably. Can you address
I'm really
that?
hungover. That's awesome.
But we
I'm
have
gonna
a
have some
good
water.
we have a good live example of the time frame dependent valleys in between those larger swings. So exactly in that running downtrend, right in the middle, if you clear the chart, that now to the right. Yeah, to the top, that little valley on half height of the. No, to the right.
Gonna get you alive.
Yeah,
Which
just
one?
a bit
This
to the
one?
right, and this to the right, just a bit.
That's an origin level.
Yeah, maybe. And this valley, yeah, exactly. We're sitting on this little, it's going up and then
That's
bumping up down, bumping up again into those levels. Yeah, I shorted
yeah.
it, so good for me.
So
So this for me is also a valley of some kind of form. And if you go down into the time frames, let's say the 3 or 5 minute, then you also have like in that larger downtrend of 50 minute, okay, but still in context to the 3 minute, you would have some kind of front side and back side. So that was
you also
commentary and a question, at the same time.
You see that candle behavior there. So the wick up above and then the engulfment down below. In there will be an origin level. It'll just be on another time frame, and that's what happens when you hit it.
Yeah.
So you can actually this is probably a little trick for people that might help them easily. So if you get an engulfment, say this one up here, where the wick of the blue candle has gone higher than the wick of the yellow candle, but then the candle has closed to engulf the body. So pretty simple, very easy to spot. There will be an origin level in there. And it's most likely going to hit that and have a very big rejection. So if you just find those wherever they are, like there's one, wick goes up above the yellow, engulfs down. That's not one. That's one. That's just slightly one. But you notice the reaction you get off those? Dump, dump, dump. That's an origin level in there, and it took a long time to break. And then when it did break, you got the rapid expansion. So, and then dump, dump, dump. Yeah. Okay, so just
to trade this
trade
one
those.
side, you'd be shorting, yeah?
Yeah, these you'd be shorting because whenever the price starts to move up like this, which is because of this. So something on the backside is required to change the trend on the front side. So our front side's coming down like this until it finds this on the backside. That changes the trend. This area here becomes the backside of the range, and this is now the front side. And then this runs into this, which reverses the trend again. So it's so the backside of ranging and the front side of ranging is basically just whatever is the current trend is the front side. So that's your uptrend, which meant this is the backside of the range from the moment this reverses and starts going up. And so these levels are areas you're looking to short. So like if you want to trade safely, you're always trading on whatever is the backside of the range. You're trading on the moments from the past because they actually create the future. So this is just everything happening over here is just reacting to what happened over here. And if you can wrap your head around that, you can make a lot of money, because then it's not about indicators. It's not about like the noise of the candles over here. It's all just kind of bullshit. It's about what was here and what that can then mean for what is over here. Because these things, they all have meanings. Like that's an origin level. You can long that because of there, and it will find some kind of resistance. So it'll reverse this, and then the underside of this will become the resistance for whatever when it bounces off this. And so you can't sort of, it's not the kind of trading you can just set and forget, because things get created. But I would say it's probably going to do something like this. Comes down here, it'll go back there, unless some other structure forms in between, and there'd be a lower time frame origin level in there, which is helping to reverse this price now. And the whole reason all of this has been created is because it's run into the hold levels that exist in the backside. That's why, that's why I just opened along at 179.
I feel like I've just been enlightened, so thank you very much, guys.
You're welcome.
Yeah.
Can we say that? Can we say that when we come down to that level, that origin level again, what is this, a 15-minute chart? Can we say for the real simps among us, which I'm just speaking of myself here, when we come down to that level and we're looking to kind of long back up, can we just go down to a lower time frame, like a 5 minute or a 1 minute, and kind of look for the same thing to be happening again fractally?
Exactly. You're looking for the reversal on the lower time frame. Yep. So that's where you get your beautiful little split screening going on. And over here is the time frame at the upper, and then what you're looking for in a reversal is something lower. So if you were trading a 15-minute chart, then over here you might want to have this on, say, 3-minute. And you mark out your backside levels. And if you're not doing like super high leverage trading, you could just take everything from there to there. Okay. And what you're looking for is when it enters into this area at a lower time frame, you want to see the reversal happen. So here it comes. It's coming down into the area. To have a reversal, you need to hit a break level. Well, there's a break level. Get rid of these lines. OCD. So you just want to see it close over that break level, and then you long it. And so it closes there, you long. And then now you just got to consider that what's on the back side here, because this has now become the back side and this is the front side. So where do you long this to? Well, you've already hit that. So, and this is really low time frame scalping here, but you'd take a TP here. Then if it hard closed it, which it did there, you'd put it back in, and then you'd take a TP here. And if it hard closed it, you could choose to put it back in. You get stopped out. Or would you? No, it hard closed it. You'd TP there. And now you're coming into the backside of whatever this is. And this is really, you should be looking for shorts once you enter that. Because for the same reason as over here is creating this reversal, here is going to create this reversal. And that's 3 minutes. So now you'd have to go down to 30-second chart or something ridiculous. And now you'd be looking for price to start to reverse and hit a break level. And there you go, that's your break level. So now you can short, and just, this is now the back side and this is the front side. So you don't want to be doing this on 15-minute
The break
charts.
level. The break level is kind of the break and retest. That I mean, in this case, it didn't retest it, but that classic break and retest of an area.
Yeah, that's it. So, and the break level, if it's broken like you see here with a volume like this, then you get an FVG, and then this becomes the backside rejection later, and then the front side will be up in there somewhere. And so when the price gets up here, there'll be some kind of rejection of that, and then up to there if it recovers it, and then this is the one that then has to try and break the uptrend at the time. So it's
the creation of that fair value gap, rejecting down from that level, is indication that we've got some volume coming in, and it's a healthy rejection.
Yep. So the idea then is to obviously find timeframes that suit. So maybe you go daily and trade on the 4 hour. So when you look at dailies and 4 hours, you'll have a lot more time to think about what you're doing. Well, there's your backside. So backside, front side. Those are those levels I posted about yesterday. So, or were there the ones in here actually? Maybe might have been these ones. Kind of where it is now actually.
Not
So-
only do you have more time, but it's also a stronger reaction is more likely or expected. So on a
Yeah.
1 or 3 minute chart, you might have missed something and it rips through both ways. Even
Yeah.
if the initial 1 cent move was a technical rejection or a bounce as support, it can happen in like a snap and you're $1 against your trade. So but on a 4 hour or daily or whatever, you have more reliable and also slower pacing.
Yeah. So if you look and say this is a great example. So your backside is here, front side down here. They're going to reverse the trend, but then the moment that trend reverses, this becomes the backside here. And so the trade of this backside was really only going to be that couple of dollars between here and here. And it pushed through and it actually went and retested this one up in here. So it did go higher, but it could have just rejected straight off that one. Could have. Not, although that did kind of test it before it went down. So if you were taking this trade, you'd be entering somewhere here and then TPing here.
Yeah, and if you can leave it open for a second as it is, I think this is a good example to round up on one detail, which is it goes. Except some background noise here. Sorry. Okay. Okay, I've got it. Just a second. Sorry, muted. Okay. Do you hear him still? No, okay. What was I about to say? So on the left side we have the daily, and we are on the way down, creating the front side of the back side before and after the hump. But on the 4 hour, you have like multiple front sides and back sides creating within this larger front side. So basically the front sides and back sides are per definition, if you ask me, self-contained within their own timeframes. Obviously, you have like overlaps. If you're looking on a 15-minute and then on a 30-minute, yeah, then it's questionable how strongly you would try to isolate those. But if you're scaling from a 1 day to a 15-minute, then you for sure have those self-containment of the 50-minute can have multiple while being in a larger upswing or downswing, front side or back side in a daily trend, So because that created a lot of confusion last week when people were trying to define the whole thing throughout all time frames in once, but that's just not how it works. So
How's everyone feeling right now? Been a lot of red, eh?
Yeah, starting to wonder if I should close my spot positions. Or...
Any counts for free. My old man gave us the green head on it, and
Yeah, I think we'll probably bounce soon. Yay! Probably a good time to look at this, right? So let's have a look at our buddy Bitcoin. So you can see what we're going to run into after discussing all of that. We're going to run into things over here, right? Very soon. All backside levels because of that impulsive move there. You're run into these. You know what it also means?
Failing an alien spaceship. Can ask, we can expect, because those are all dailies, we can expect some kind of bounce on those levels.
Yep.
On lower time frames.
Yeah. Also higher. Yeah.
Yeah, so there'll be a lot of longs in here. There will be very high time frames, actually. So there's your weeklies. If we hit that, that's a retest of a hard closed origin level on a weekly scale, so that should send price flying. Should go past that. That's another one. That's even bigger, actually. Bigger time frames. That's a backside. There's so much stuff to bounce the price down in here in really high time frames. It's just how much does it go? All of these need to be retested at some point. So you could see a scam wick to 88 even. Like, it'd be insane for that to happen, but it could happen. So these are either going to be levels that create relief rallies in the bear market later, or you're going to see some epic FUD release in the next day or so, and will be tears.
So I see someone put as a question, which I think could be relevant, is how to determine if hold, break, or origin levels are completed or spent. Because we see a bunch of candles touch those lines or go through those lines. When do you consider them done?
So a hold level will have a break level. So hold being there, the engulfment, which got hit there and went up. Break level being the bottom of the accumulation in this case, or say in that case, this was the break level, and that was the hold. Now, once the break level is hit, which is this candle hitting it there, the hold level is done. So that's bye-bye. So if you consider back here,
Korean or Japanese? Is that Korean or Japanese?
let's go with Japanese.
Soon everybody is muted.
Okay, so this was an interesting time in Bitcoin Weekly. Remove all that. Okay, break level. Break level. I should really do what you smarter people are doing and save these as templates, eh? Hold level. That was fun, eh? Notice how almost perfectly exact those percentages are. Like the symmetry in that. Just, I'd love to understand that, but that's what was created there in the very first instance of the ranging. Now, when it hit this, it created an origin level to the downside. And when it hit this, it created an origin level to the upside. So it was always going to be, if we go below $90,000, we're going to have a very rapid impulsive dump. And if we go above 108, we're going to have a really rapid impulsive pump. It's going to be one or the other in the future, all just from this very, very beginning of the range. Now, hold levels themselves then become pretty irrelevant. From this candle here and this candle here, these are no longer relevant because they've failed to hold. What you've then got is you've got a hold here and a hold, and a hold here. And then you've got a break here and a break here. So this range, which was initially up in there, has now shifted to being in there. So you're probably going to break down from that point. The ranges are actually moving to the downside. And once you get below this origin level that's in here, it's going to get a very fast impulsive dump. And then one day, if it ever gets back up through these ranges and it gets above this 108 level, it's going to be a very fast impulsive pump, is the gist of it. And then we wait, and there's a really big, rapid, sort of nasty move down as we collapse through the origin level. And then they accumulate. This is where everyone starts to get scared, sells their Bitcoin, bear market's on, blah, blah, blah. They buy it all. And that's what happens when we get over that level. Wait for it, hard close it, boom. There you go. So the answer to your question is hold levels are no longer hold levels once break levels have been touched. And if the break levels reject or create accumulation off the bottom ones, or if they create further distribution off the top ones, then they become origin levels. And then if the origin levels get the opportunity, they will create, if they get lost, they'll create big impulsive moves to the downside or big impulsive moves to the upside. That's
Awesome. Thank you very much.
easy. And you can actually define how ranges move, and that sort of, it's an advanced thing for a masterclass one day, but I think Cotton Candy talks about Pandora's boxes, boxes and boxes and boxes. But basically you can actually define which direction the ranges are heading, and then gives you a pretty good bigger time frame bias as to whether we're going to go down or up.
So, and hold and break levels are not really ever invalidated, right? So you get always some form of reaction. It might not be that you get the daily reaction on a daily hold level, but it can be in 1 hour, 2 hour, 4 hour, whatever,
Bingo.
or from a weekly, it can be in a daily, but you quite
Yeah.
can be sure that you get a reaction of some form.
Yep. So a hold,
and then there
the
are
only thing that
sorry,
can
and
break a hold level is a trend. So that's where things go wrong for a lot of traders is, let's see, let's find a trend. Crappy. Might have been that.
I mean, if you define by the wording invalidation, it goes for me rather like consumption. So if you want to quote unquote invalidate a hold level, then it's rather for it being consumed already more than that there is an actually invalidation. Same as for break. So you get those reactions as we've seen on the multiple examples earlier for origin levels, which are break levels. They may create sub break levels. And they never get really invalidated. They get consumed at some point, and then it's when you get the breakout. So you would look into lower time frames and look for a structure that would invalidate them to break through, sort of thing.
Yeah, I think I was watching one of the stream videos, and it was an example of a trade where a level was hit and that level invalidated the trade. But I'd have to find the clip again to phrase my question a bit better, I think.
That's probably what's in this drawing right now. Just wanted to fill the air gap.
So you see this this area here. So you've got actually trends can go both ways. So that's the trend, and then the trend changes. So this hold level here, this hold level wants to push through and break this trend. Okay, so that's effectively, which it didn't do. You see, beautiful, lovely rejection over there too. But that's what that hold level wants to do, is break that trend and keep the price moving up. But when it failed, the price comes down, creates a downtrend. Then part of that downtrend creates this hold level. This hold level wants to break this downtrend, which it managed to do over here. And then that moves up to there, and then that probably becomes some annoying thing that we're going to run into when we get to like 130 in the future. But this trend that was coming through here was the support that's trying to break that hold level. And it did actually do that, so that this trend won and broke that hold level because that did hit the break level. So that's gone. But the problem is that the break level also tries to, it's like the last final boss in the video game. It's going to try and break the trend as well. And it came down and then it closed this candle below this trend. So that trend was then shot, it went to there. And as you can see, the price just started to collapse until eventually it closed under the older trend through there and then took a nosedive. So hold levels basically are trying to break trends. They're trying to break the support or break the resistance depending on what side that they're on. And break levels will also try to break trends a lot of the time. So when you're taking trades on them, what you should be trying to do is figuring out where is my trend. Whatever it was at that time was up here. So it'd be something from back here probably. Right, yeah, that's it. So this hold level created after this candle closes you would have longed here and TP'd at that trend. Now, hypothetically, if that trend was there, you would have longed here and TP'd at that trend, which is before the 1618. But it was there, which is why you got your trade. And then this becomes a deviation or a sweep of the liquidity above the trend. And when that kind of thing happens, you normally, that's the first warning sign of a big downwards move coming, is because when you just tap a trend, it's usually just following the trend. When you actually go above and sweep one like that and grab all of the shorts that were sitting up above there, you're usually going to have a bigger move to the downside in this case. And that's quite often why you'll see that
When
the biggest moves come after this type of structure here. And if you run the trends from somewhere back in the past, like the older trends, you'll notice that you usually end up with some kind of sweep below the trend. And that's the indicator that you're about to get a bigger move because they took all that lower liquidity.
it's also that origin thing on a lower time
Yeah.
frame in there, right?
Yep. So you're going to get an origin level because the price is going to reverse. You've got a sweep of trend liquidity, which says it's going to be a pretty good move that's going to come afterwards. It'll be the sweep of some older trend rather than whatever local thing is going on in amongst these candles. And it's probably, I don't even think this did actually test a backside level back then. They tricked everybody, created an origin and reversed while everyone was waiting for 68. It was actually probably a trend retest of something from back here somewhere. It's also kind of why you got to be a little bit careful about using the topmost candles. You should always run trends from older points, and you can run them in upwards directions to identify the tops that you should then run them down from. So if you look at something like this area here, which didn't really have a huge dump, so you could say that that was a trend, and then it became that, okay, which meant that this was sweeping liquidity, and then test and bigger dump. So you could then take that one and run it across to that one, and then you could take that one and run it to that one, and then what that basically says is that that one is the point. Out of everything up there, that's the point at which you would then run your next series of trends. There. And then that'd be a sweep. Yeah. Don't know whether. Ooh, tricky. And there we go. That was your trend rejection all the way in the future. Might not have got that quite right. Be that actually. So, and then that was your retest of hard closed trend. Origin level formed in there on a lower time frame. Price reversed. Price took off. And so it's a combination of, you know, what is support, what is resistance, and you know, a trend can be support or resistance. Any kind of hold level, whether it's front side, back side, can be support and resistance. Origin levels can be support and resistance. And so that was, you know, people were waiting for, say, 68, which pretty valid, for valid reasons. Everyone was waiting for some kind of retest down here, forgetting that you had this running all the way through here, and that was enough to create the reversal of the price. And when you look at the areas of expansion came when it got back inside the origin levels. So that was, where was that? That was one. And that was the other. So all pretty fast moving once it got back inside the origin levels, until that big rejection again when you hit the origin back there, because that had never been tested. Right? So that was created, but had never had that second touch. So then we hit that 108 and we go back down to 98. And then what happens when it gets closed? Expansion again. So if you were trading Bitcoin on a weekly scale and you just weren't really taking that many trades, but you were just swing trading spot, and this is why I just cannot wrap my head around people who just hold this stuff. Even if you only would take a couple of trades a year, it's like, why do they just hold it? You'd be entering anywhere down inside this region. Yeah, and then you'd be looking to see what happens here. That would be a definite rejection. And then you'd be looking for where it could recover. Where could it recover? Sort of anywhere from that level down. And if it was spot, you wouldn't be terribly worried. You'd just be sort of like, I'm going to sell it at 108, I'll buy it back at 99. And then off it goes again. And then something up here has gone wrong, obviously. It's because you can take these trends and then continue to move them. So it's that would have gone there. Hello, look at that. See? And then that would have gone there. Hello, look at the rejections. So that means that if it came back to 112 at some point in the future, it would probably bounce. There you go. See how
Until
all the
not
dopamine
anymore.
gets taken. See how all the dopamine gets taken out of trading. Yeah, so we're going to close under that trend probably. Guess what's going to happen? Actually, we've got 3 days to get back above it. Fun times. I need to record a daily video.
Yeah, I was going to say, how are you doing for time, Sen? Do you should
Well,
we wrap it up soon?
it's a prime day, so there's only a daily close today. So it's probably not going to be the longest video in the world, but I guess we'll just talk about these Bitcoin levels. We're really just waiting for this thing to bounce off something. And it may not, like that trend that I just had on the screen there, which is about 112-ish. It's a weekly trend. In the next 3 days, that trend's going to basically turn its bungee cord on, and it's going to try and pull the price back up. And so if they don't hit these or retest these bottom levels in this sort of next 3 days, then really it's the trend itself is going to start to try and lift things. and that kind of means they have to move with speed if they want to go down and grab that liquidity. So I think that's why you're sort of seeing these last few days have been quite well, aggressive. How's my YouTube going? Yeah, it's funny. You record videos, you talk to yourself, you post them online. You get kind of internally disgusted when you I've never really focused that much on social media, and because it's all just noise. But now that I am focused on social media, I'm really noticing how much noise it is. All these, someone told me yesterday about a token that they've been given some inside information from one of the VCs, and it's going to pump in the future. And I then sort of saw yesterday a couple of YouTubers coming out with, this is a really strong token, it's got these great fundamentals, it's blah, blah, this, that, next thing, and they're obviously shilling it. And then I sort of looked at the chart, and the buy time on it was probably about when it was a quarter of the price it is now. So then I was like, okay, I'm kind of in a moral issue with all this. Like, it's gone up, 400%. And now the influencers are all starting to talk about it online, and retail will start to buy it. And it probably will go up another 100% just looking at the chart, which is nice. But they're going to be selling into them as it goes up, that 100%. So it's, and when it gets to the top of that, it'll reject real hard. So fun times. Yeah, I don't know if it's a very honest industry looking at it.
Do you
And they
have a
just talk
couple
so
more
much
minutes
shit.
to address a major topic, which still raises a lot of questions? We're probably ongoing with more people coming every day, which is pretty cool. 100 more members within almost 4 weeks. That's pretty crazy. But one obvious question is, if you have about 720 time frames you could take a trade on, how do you actually choose at some point, okay, now I'm pulling the trigger, because you can obviously long, you can only long, you can maybe only short, go with the trend, scalp against the trend for a little swing. How do you do?
So it's really about confluence. It's about finding the levels that just have repetition across all the different time frames, because they really are the levels, and they're not going to be deviations. They're not going to be anything out of the ordinary. They're just going to be the levels. And then how do you take a trade? Well, you take a trade on a time frame that actually fits within your time. So if you've got 1 day a week to trade, then you really need to be looking at the levels. And if you're lucky enough and you're at one of those levels on that 1 day, then you're going to be taking trades on the 1 hour time frame in the direction of the bigger move that's in play, which is effectively your safety net.
So it's like, for beginners, let's say start with weeklies and dailies, maybe dive into 4 hour and then 1 hour, 50 minutes to get precision. And if you find confluence at one price point coming from multiple of those, then maybe you find yourself in a more confluential trade to pull the trigger for yourself while exercising, learning, not sweating about 50x, trying to catch every move.
I think if people just learned to trade on dailies and 4 hours, and just take trades between Tuesday and Thursday, is probably the best way to learn. Because if they're going to really fuck with you, they're going to do it across a weekend, or they're going to do it on a Monday or a Friday. And pretty much from Tuesday to Thursday, the true trend will play out. And what it typically happens is the weekend's all about building liquidity. It's about establishing a trap, and that's for both directions. Like, they're trying to get people to take shorts, they're trying to get people to take longs, and they're effectively baking all those cakes. And then on Monday, they decide which way they're going to go eat first. And then the true trend is the reversal after the first set of liquidations, where they then travel in the other direction to liquidate the other people. So you sort of, if you're new to trading, the first thing is that you should not trade Friday through Monday and just focus on trading Tuesday through Thursday. So when I was working a day job, I realized that pretty quickly. I initially, when I scaled out of working and just went to full-time trading, I actually went part-time, and I purposely took those as my days off so that I would have the best trading days, easiest trading days. And then when you start earning more money in an hour than working 2 weeks, you go, fuck this. And
Yeah,
do your
patience
job.
is the third trade type category,
Yeah.
if not the most important, to be honest.
Yeah. Waiting for there to actually be a reason to trade. You know, there's a lot of waiting, and I
Yeah,
mean, you
Mr. Dip
can
called it
dial
once.
down
We're
and
not day traders, but day waiters.
yeah.
Yeah.
I mean, you could dial down to 15-minute charts and take trades, scalps, you know, all day long on a 15-minute chart, because you've got front sides and back sides just constantly happening, you know. And there's a back side, and then there's a front and back and front. And,
Can I
you know.
jump in? Hello.
Yo,
Hello.
hello.
Hi. Hi, it's Jay.
Hey, Jay.
Question. So I been trying to keep up. So I'm way over trader, but I took from experience last year to just not play with that much money. Big positions has been spot, and I just kind of follow you guys to when I should rotate
I think he's
between
unmuted.
USD.
He's muted.
No, you're
No.
good.
Yeah, I've unmuted you. Yeah. Mm-hmm.
I'm trying to really learn, like, where how do you
Where to,
target it? Like, because I'm trying to get outside of where obviously you don't want to be where everybody else is, but I also
yeah.
don't want to be wrong and then just leaving a lot of money on the table just because, oh, just give myself more space doesn't really make sense if it's invalidated, you know?
Yeah. So if there's going to be a small reversal, then your stop loss being at the top of or just above the top of a range is fine. If there's going to be a bigger reversal, then they're going to sweep the liquidity above the top of the range and then reverse. So if you put that in context with how break levels get hit and then origins get created. So the break level is the top of the range. And if you put your stop loss, let's say at that would have been 190, would have been more or less the daily, somewhere around the daily break level, very close to it. I think it was like 191. In fact, your stop loss was within the range. So that's probably the first thing not to do. Where is Sol? Here's Sol. I mean, your entry was fine. Your stop loss was just within the range, so that's kind of what got you. See, what you should have had as a stop loss at least above this break level at 191, 191.243 on the daily. Now, if the and this there's I guess there's a difference between having like a hard stop or a soft stop. So there's a thing, I don't know whether that's even the right terminology, but I call it a soft stop, right? A soft stop is where I know where I will close my trade, but I'm not going to put a stop loss in. I'm just going to watch it, right? And the reason you would have a soft stop is because the break level will reject. And if the break level does reject, then I might be able to get out of my trade and profit anyway, rather than being stopped out at a loss. So, like in this particular instance, if I was shorting that, I would have had my invalidation would be, does 191.243 get hit? Because as soon as that gets hit, the daily range is broken to the upside. Now, there's a 50% chance that it gets hit and goes down into distribution anyway, and then that becomes an origin level, and that's great, and my trade has therefore played out. But what I would do to be safe is that if that got hit, as soon as I got back to my entry point, I would be closing or reducing at least reducing the size of the position to cut the risk, and then I'd identify whatever the uptrend is, because the break level will ultimately target the trend, which is going to be there. So you'd actually be able to probably still win on the trade, but you'd just be looking to where your TP is actually more appropriate. So yeah, what would I have done? Yeah, if that got up. What are Prime days?
I'm not so prime.
Well, so where candles close based on closing timeframes dictates horizontal structure. So there's certain days of the year where, like if we just look at, say, a 5-day chart. Here's a 5-day chart. So this candle opened on the 9th of August, and then this one here on the 14th, and so on and so forth. There are certain days of the year where none of these days really cross over, and all you actually have is a 1-day close. So as far as how the algos can move the price around, it's about consequence, right? If they were to choose today to dump the price, they can do a double. It's kind of like they can achieve two things. They can dump the price down to the lower levels on Bitcoin, and they can keep it there for at least another 24 hours, because it's not going to be until UTC 12 o'clock tomorrow that you get a whole series of structural closes again. And so the concept of a prime day is that if you want to liquidate people, there's two things you got to think about. One, you're not going to be able to get them all, because some of them won't be on really high leverage, and some of them will, their stop losses will be up higher or down lower or whatever. But you can get them to capitulate if you keep the price looking like shit at a low level for as long as possible. But the issue is that if you do that on some days, or most days, if you do that, there will be a whole bunch of structural closes that come in at that point. And then you will be closing above or below some level. And if you're doing that, you're actually messing with the price structure for the future. But if you do it on a prime day, there's only 1 day closing. And if there's only 1 day closing, it doesn't take long to fix what they screw up. So that's why you tend to see things like the Trump pump being a prime day, and the one we had this week, or the one we had just last weekend, was the first one in ages where it was a boring weekend. But to that, there was also 2 days prior to that, there were a couple of closes that were just a 1 day and a 2 day, and like a 1 day and a 3 day. So they're very close. Whereas most days there's a lot of very big structural closes, which can take a long time to fix if they screw up the level at the close. So it's That's the thing about prime days. They're days of volatility where if they're going to go and try to, liquidate a whole bunch of people deep down, then that's the best day. Yeah, basically, it's Elmo Chaos Day.
Tomorrow we have 14 closers right after Prime, so very big day
Yeah.
to do things.
So they've really got to, like, whatever they're doing, they've really got to do it today. It's if they're gonna do a scam wick, they've pretty much got from today through to 12 o'clock UTC tomorrow, and then at that point, the intentions will be clear, because if they keep the price low past that, then yeah, you may want to consider getting rid of the spot. Yep.
Expecting some volatility one way or the other. Usually, like I kind of expected some more whiplash than we saw, but I mean,
So
then
you
great
look higher
price
time
movements
frame.
make down.
You look higher
Right.
time frame, and you go, okay, so it's like on a liquidity or a heat map chart. You could choose 12-hour,
Right.
1 day, whatever. You'd be going,
Right.
okay, if there is a day that they're going to go and take the 30-day liquidity or the 3-month liquidity, this is going to be the day that they do it. That's what you're sort of looking at, and then you just got to make sure
Right.
that you set your sizing and positions and leverage and everything appropriately for expected volatility and bigger
Yeah.
moves.
Thank you for what you're doing, man. Appreciate it.
Yeah, no worries. I'm going to go and record a video about the 1 day close that we have today. It's been an exciting one for everybody. All right, catch you later.
Bye.
Thanks, Sin. Okay, guys. This was a great session. Did someone record this one? I believe we had the one last week recorded. Perhaps we had this one recorded. If we're lucky, someone may have recorded it. Does anyone have any final questions before we go? They can throw over to Blue.
I mean, we
Hybrid
didn't
said he's
had
recording.
to just wrap it up, So, but people are already leaving. So,
Oh, Sin's gone and everyone's jumped off. Okay, great. Well,
it is
guys,
what it
thank you
is.
so much for joining. Yeah. This was another really successful session. I think we learned a lot. Certainly have a lot to go and practice. So thanks for Sin and thanks to Blue for sharing their time. We appreciate it a lot. Drop your questions in the message thing for next week, or you just throw them in the Discord anyway. But yeah, and thanks to Blue and Charger again for keeping the Discord running great.
Yeah, same. I mean, he left already, but the Range Potato had one question about a specific trade, but we can do it the next week. I still remember why things happened like they did. So, yeah, whatever. We have a couple of questions left open and just can go through them next session.
Perfect. All right, guys, thank you so much for joining. We really appreciate it, and we'll see you guys next week, same time, same place.
Yeah, much appreciated. Thanks again for coming, recording.
Thanks, everyone.
Have a good one. Bye.
All right, guys. Bye. Take care. Bye. Ciao.